We can all agree that investing in household items is pretty boring. I mean, there isn't really anything that's that exciting about owning shares of WD-40 or Sherwin-Williams, regardless of how well they perform. But there is something very exciting about a stock that has gone up over 1,000% since February of this year. And it's really not every day we get to talk about a 10-bagger on this show. So let's go ahead and talk about Tupperware. Hey everyone, thanks for joining me today. My name is Matt, and before we get started here, I just want to say that not advice, please don't take this as advice. If you do need advice, go speak to a financial advisor. They're great people, and they'll always want to help you out. So if you need advice, speak to them. This is just for your entertainment. Also, if you like this video, hope you consider hitting the like button, and the 88% of you that are not subscribed, it's okay. I just hope that you're still considering doing so, and maybe make the switch to being a subscriber sometime soon. With all that nonsense out of the way, you did hear me correct. The company that is now a 10-bagger, or has gone up over 900% since February, is Tupperware. Yes, the food storage container things that you have in your house that are the hardest things in the world to keep organized. Now, before we jump into this, I have to be honest. I didn't even know that Tupperware was a publicly traded company. I was actually under the impression they were just owned by like Rubbermaid or, basically it was just like a styrofoam where that name is just used as like a food container kind of thing. But they are their own company and they've been doing very well. And if you're a shareholder, you have made yourself a lot of money so far this year. Earlier this year, Tupperware was trading at just shy of $2 a share and has reached as high as over $30 a share this year. Right now it's around 27, so taking a little bit of a hit, but this stock has been on a run, and for a while it seems like it couldn't be stopped. So are you confused about why this stock has done so well? Good, me too. So let's take a deep dive into what's been going on with Tupperware and see if we can make some sense of this and see if it's going to be a good investment or something maybe worth adding to your portfolio. So maybe one of the first things that has led to this increase in Tupperware sales has been the pandemic. Now, pandemics alone will not make a company a 10-bagger, but it's definitely worth noting. With people staying at home, there's clearly a need for food storage, especially with more and more people starting to cook at home, and a lot of people have taken up now cooking as a hobby. It's an essential item to have, so that way you're not wasting leftovers or using Ziploc bags for everything you need to store, regardless how easy that is. And Tupperware is just kind of a no-brainer item to have in your kitchen. And for Tupperware, their sales were actually up 14% compared to last quarter. So from the third quarter compared to the second quarter, those were up 14%. And they were up 42% in the US alone compared to last year. Now, not all of their sales have been up, and the sales numbers really weren't that impressive when you look at some of their other markets, because they had issues actually sending their products to other countries when the pandemic first started. So their sales have taken a hit, which again had me curious of why is the stock doing so well. So we had to take a look under the hood and see what's going on at the company itself that has really helped driving this growth. And one of the first things is that analysts' price predictions were very wrong for Tupperware. Analyst predictions actually had an average estimate of Tupperware having a negative earnings per share. Not only did Tupperware report a positive earnings per share, they had an adjusted EPS, so non-GAAP measurement, of $1.20 per share. Last year at this time, to put that in comparison, their earnings per share was 36 cents. So it's almost $1 more per share that investors have received this year, again, using the non-GAAP measurement. So what might have now led to this increase in the earnings per share? And what I'm doing here is kind of taking you through my thought process. So first thing I obviously assumed was that their sales would be up. Their sales weren't necessarily up, but I did see that increase in their earnings per share. So then I take a look at the company and see what is management doing to drive the growth in that earnings per share, as well as are there any external factors. So we're going to focus right here on the company and management itself. Then we'll look at some of the outside factors that might have helped drive this as well. First and foremost is that Tupperware now has a new management team. And actually in the second quarter of this year, Tupperware basically revamped their entire upper management team as well as some of their executives to help try to create a more prosperous company. And the new management has a lot of different plans in place and very strategic plans to help continue this growth for Tupperware. And the very first thing that they're focusing on is paying off a lot of the debts that Tupperware has. For a company, kind of like what I said with Callaway, that's been around for so long and has a lot of customers using their products, Tupperware has an excessive amount of debt. They actually have a quick ratio right now of 0.25. And if you've been watching my channel for a little bit, you know that's an incredibly scary thing to see, and probably something I wouldn't necessarily throw my money into, because that is such a large sum of debt. Now, I think paying off their debt is going to be a good decision for them right now, because it allows them to take advantage of low interest rates. Low interest rates obviously means less payments, which allows them to take a bigger dent out of the debt that they owe. So I think that's a great place to start focusing on and help just strengthen the balance sheet for Tupperware. But the question always comes is, how are they paying off debts? If their sales really haven't been up, what other options do they have to start paying off this debt and really start chipping away at it? Well, in their earnings call, they said that their management team has made an emphasis on creating a leaner, more responsive, and effective organization. Basically, what that means is they are divesting or selling their non-core business assets to raise capital and become a more liquid company. Very fancy way of basically saying they are selling out of the parts of their business that don't do well for them and using that cash to pay off debt. Their second biggest focus happens to be on their sales force. And I use second kind of loosely. It could be their first, because they actually mentioned their sales force 17 times during the earnings call. So obviously this is going to be a point of emphasis for them, because it's top of mind if they had to bring it up 17 times during one phone call. And the reason why this is so important is because their current sales model, to my surprise, is actually the multi-level marketing approach, which, if you're not familiar with that, maybe you're familiar with Cutco or Vector, those knives that people sell, where it's basically they don't use advertising, they use word of mouth, people's connections and referrals to sell their products. And I think a long time ago, not a long time ago, maybe like 10, 15 years ago, this could have been a very good approach for sales, because it was cheaper than having to run TV ads, news ads, radio ads, billboards, you name it. It was just a lot more cost effective to not have that large expense and rather use word of mouth. And you might have actually seen this before. If you saw the movie Napoleon Dynamite, this is what Uncle Rico was selling when he was going to like Napoleon's prom date's house or something, trying to sell them Tupperware. But I don't think this kind of sales model is going to have the same impact as it had previously. Reason being is because digital advertising has become very cost effective. And I know this from real estate. It's very cheap to run an ad on places like Google or Facebook as it would be to try to run an ad on your daily local news. So digital ad space has become very cost effective and will obviously have a bigger impact than just solely relying on word of mouth. So management has decided that their new sales model will have a bigger focus on establishing an online presence and allowing stores to start selling these products more often, which is going to be a new outlet or a new reach for them to reach new customers. Again, instead of waiting for that knock on your door to have somebody say, hey, can I talk to you about Tupperware for a little bit? So I think this is a smart decision. I was very surprised to see that they were still using this multi-level marketing strategy for their sales approach, but hey, teach their own, and at least the new management realizes that they're gonna have to make some changes if they want to remain relevant. Now, that being said, I didn't see if they were planning on getting rid of the multi-level marketing or not, and personally, I think they should keep it, but not have that be their biggest source of sales, because I mean, it's always going to help drive a few extra sales when you have those people selling, the Tupperware, kind of like people do with Mary Kay. You know somebody, they might be able to buy it directly from them or help push the product a little bit. And it's essentially free. They just pay a commission. So I don't believe they're going to get rid of this multi-level marketing, but I love the idea of having the bigger online presence and just having an overall bigger outreach and reaching new customers that they weren't able to previously. The last way that management plans on helping to strengthen the balance sheet for Tupperware is by making their productions cost lower. They believe for having been in business for so long, with the way they're currently producing these Tupperware, and I apologize, I'm not sure how they're doing it, but they say it's just way too expensive, and that's what really has been hurting their balance sheet this entire time. So looking for a more cost-effective approach, again, will also just help them have a little bit more cash flow running through the company. And as you know, I'm a big cash flow person. So if they can reduce costs but keep sales the same, if not higher, that should make this company look very more attractive. But outside from what management's doing, there's another big thing that has happened very recently for Tupperware that should help continue to grow this company. And that's that they landed a patent with NASA, which basically is saying that Tupperware will be the provider or creator for containers to grow plants, vegetables, fruits, whatever, on the International Space Station, which is a really cool thing. And I don't know if this makes us an aerospace company. I don't think it does. But I just thought that was a pretty interesting thing to know that Tupperware is going to help grow plants in outer space. So that is obviously going to help bring them a lot of money. We know NASA has a lot of money to spend, so it should overall, again, help give a little bit more money back to Tupperware. And also, Tupperware, and take this with your own thoughts, positions themselves as a environmentally friendly business. Now, yes, they produce plastics, so that's where I'm saying take this with your own interpretation. But they do say that they cut back or help cut back on the amount of landfill used for other plastic items like Ziploc bags. And so, that you could look at them like they have the environmental approach. Also, they're switching to using solely recycled plastic for their Tupperware. So that's just been another thing that has caught the consumers' attention, because a lot of people do prefer some environmentally friendly options out there. And with Tupperware now using the recycled plastic, it helps minimize the amount of plastic in landfills. Could be a very attractive item for many people to have in their household. So that should be another thing to help drive sales. So those are kind of the two big external factors as well. So just to quickly summarize that. New management team. New management team is paying off debt, and they are restructuring the sales model for Tupperware. Also, management team is looking for a more cost-effective solution towards producing these goods. Outside of what the company's done, they are now partnering with NASA to help grow plants in outer space, which is super cool. And also, you can view them as an environmentally friendly business. So those are 5 really good reasons, maybe 4, but 5 really good reasons for why this company has skyrocketed and has become a 10-bagger. Hopefully the last time I'll say that this episode. So with all this really good news and things definitely looking like they're headed in the right direction for Tupperware, is this going to be a company I'm buying? And for once I have a straightforward answer, and it's no. And yeah, it's very, very weird to take a hard pass on a company like this after seeing that they've gone up over 1,000%. But my thought process behind it is I always struggle getting behind a company that's already popped. We like to try to get in there before it goes. And sometimes I feel like when you buy into a company after it's gone up over 1,000%, then you're kind of doing the opposite of buying low and selling high. You could be buying high and then ultimately be forced to sell low depending on what this looks like in the future. Also, with this company trading 80 times plus its earnings, that to me makes it look like this is a very expensive stock. But there is a plus side to it, and there's a reason why I would add this to a watch list rather than disregarding it. And that's because analyst estimates give this around a $45 price target. So that's about an extra $15 from where it's trading right now, give or take. I don't know exactly what it's trading at. And also to kind of back that thought process up, Simply Wall Street's discounted cash flow analysis shows also that the fair value for Tupperware stock is around $45 a share, give or take. So with that being the discounted cash flow analysis, as well as what analyst price targets are, there is a lot of room for optimism with this company could easily go to $45 a share. Will it immediately? That's the part we don't know, and I think a lot of that will depend on how effective this new sales approach is and how basically overall this new management really takes this company, and if they just live up to what they're saying. So for me personally, I'm going to watch out. I want to see these sales numbers increase. I didn't like seeing that all of them, basically majority of other countries were down. I get why, but I want to see their sales numbers increase. I want to see a strengthened balance sheet, so I want to see that debt level get taken, reduced. Even if they can get it a quick ratio to like 0.5, I think I'd feel more comfortable, but 0.25 is just too low for me. So, again, this is when I'm going to sit on the sidelines, but I'm keeping an eye on it. It's now on my radar, and I think it should be on yours as well. Again, not saying it should be in your portfolio because it might not fit, but you should keep an eye on this one. And if you do have a watch list set up anywhere, I would definitely make sure that this is on your watch list. Ticker symbol TUP. With that said, I still think boring is a beautiful thing sometimes, and this has made a lot of people a lot of money. So if you were a shareholder, congratulations, because you have done very well for yourself with the stock. People probably would have mocked you if you said that you had Tupperware at $1.95 a share. So that is my thoughts on Tupperware, and I'd love to hear all of yours. So if you own this stock, if you're thinking about adding it, or if you think there's anything I maybe missed about this company, please leave that in the comment section down below. Also, if you like this video, I hope you hit it with a thumbs up. And again, if you want to subscribe, it's still free. I checked this morning. I can confirm it's still free. So maybe you want to hit that button as well. Just helps me out a lot and always gets me very excited when I see we get a new subscriber. So thank you so much for those of you who are already subscribed and for bearing with me throughout these videos. We're going to wrap up here though, so thank you so much for taking the time out of your day to watch this video. You could be anywhere in the world and you're right here with me, and I really appreciate that. A little bit of a different ending here, but always keep in mind, an old chunk of coal can be a diamond someday.